Hi everyone, and welcome to the very first video of chapter number 1. The name of your chapter, as you can see in front of you, it's financial reporting and the financial statements. So here you're going to get an introduction to what FA is, financial accounting. So financial accounting, financial reporting, these are all synonymous terms, but they have some differences. When you talk about accounting, accounting is only making records for yourself. Reporting is when you bring it out to the public. When others are given that information, it becomes a report. So this is the difference between financial accounting and financial reporting. Now, talking about the financial statements, as we progress further into this chapter, we'll also learn what are the different sorts of financial statements. We have the statement of financial position, which is the balance sheet. We have the statement of profit and loss, which is the P&L account. We have the statement of cash flows. So these are all financial statements which we have. So the very first topic that we are starting off in this chapter is, firstly, we will learn that what are the different types of business entities. So if you want to run your own business, you can do a sole trader business. If you want to do it, probably do some business with your friends, then you can have a partnership. If you want a greater business, which even goes to a larger scale, then it will probably become a company. So there are different types of business entities. We'll talk about these different entities video by video. So the very first that we are going to talk about is a sole trader. As the name itself suggests, it's sole trader. So sole means individual, sole means alone. So the person who trades alone, who's the only owner of the specific business, is known as a sole trader. So you can see in the definition also, it's an individual who owns, controls, manages the business alone. So this, if let's suppose you start up a business of your own, so you will be the sole trader. That means you will be owning the business, you will also be controlling the business, and you will also be managing the business. Now these are three very different things. Being an owner and taking the decisions is a different thing. So sometimes a person could be an owner of the asset, but somebody else could be using that asset, somebody else could be controlling that asset. So here, when you start a sole trading firm, you will be the owner of the business. That means all of the assets will be in your name. All of the liabilities you will be owing to the other people. Then controls. Control means you have the sole decision-making authority, that if you have a specific asset, how you want to use it, that will be decided by you on your own. Nobody else will tell you that. Talking about the third word, which is manages. So that means that all of the day-to-day operations of the company are also going to be done by the sole trader. Obviously, the sole trader can keep some employees to help him, but the owner will be only one person, which is the sole trader himself. Now, talking about what implications does it have in the legal terms. So very first factor that you will see in front of you is change in business ownership. So let's suppose I am a sole trader, I do my own business. Now, if let's suppose I want to bring in more people, then it can no longer be a sole trading firm. Then it's going to become probably a partnership or a company. So change in business ownership is only possible if I want to. Nobody can force me to, stop my sole tradership business. Then the next difference that you see with respect to other sorts of entities that we will be talking about, another factor which sets sole tradership apart is the business continuity. So if I am the sole trader and I am no longer there in this world, then my business will also die with me. So this is what business continuity is in sole tradership context. If the owner has died and they have not passed on the business to somebody else, then the business also dies with them. The third thing that you see is with respect to taxation. Now this means that I will be taxed because all of the assets, all of the income is coming under my name. So I will be taxed and not anybody else. There's no specific separate company. There's no specific separate partnership. So it is me who the taxes, I am the person who's going to pay the taxes. So this will all fall apart in my personal income. Now coming towards the fourth factor, which is the ownership of business property. So as we were talking about in the very definition, that the individual is owning the business. So all of the ownership of the business property is in my name. So I am the owner of all of the assets that the business is actually having. Then the fifth factor that you see is legal action. So if let's suppose there is any penalty or any fine which the court has imposed, then I will be personally responsible to fulfill that penalty or that fine. So because everything is in my name, there is no separate entity. Sole tradership is me, I am the sole trader. So there is no separate entity. That means if there is any legal action also, that is also to be borne by me. I will have to sell off any of my assets which I have not even put in the business to be able to repay my liability if that sort of liability arises. So I have an unlimited liability as far as sole tradership is concerned. Now, talking about the advantages which are there with this business is, firstly, the very big advantage. This is mainly for those people who do not like to be told what to do. So these are the people who enjoy doing things their own way. So if you are a sole trader, you have the entire control of the business in your own hand. You can do whatever you want to do with your business. So the number one advantage is with respect to the control. So the sole trader is going to have 100% control over the business. This is the first advantage. Second advantage that you people will be able to see over here is with respect to business formalities. So if you talk about being a company, companies have to follow numerous rules and regulations which are set by the government. When it comes to a sole trader, you do not have so many formalities to do. So, you have to draw your accounts a specific way, you have to get all yourselves audited. So these are all the rules that are there for companies. There are many rules. We will slowly and gradually, you will also learn when you progress through your ACCA qualification. So sole traders are exempt of any such formalities, which makes it a very big advantage. And the third thing is with respect to flexibility. So if it's your own business, you can do things however you want to. You can work whenever you want. You can take a leave whenever you don't want to work. So this is how flexibility is another advantage when it comes to the sole trader business. Now we will move forward towards the disadvantages. Nothing in the world only has advantages. A coin also has two sides. So the second side is what we are going to talk about. We've spoken about all of the good things. Now let's talk about what could be bad when it comes to sole trading. So the very first disadvantage that you people will see on your screen is with respect to liability. So that means, like I was telling you people, if let's suppose the entire business that I have, all of the assets are worth maybe $1 million. Now the court has imposed a penalty of $1.2 million on me. Now the business that I have put in, the invested money, is only $1 million. So I will only be able to get $1 million of the 1.2 fine that I have to pay. So where is the remainder of the $0.2 million going to come from? From my own pocket, from my own savings. So this is how the owner of a sole trader firm has unlimited liability. They have to repay all of the debts, all of the obligations of the company, even if it means selling their own assets to do that, their own personal assets to do that. The second disadvantage that you see over here is with respect to raising finance. Now, if I am the only person who is the owner of the company, of my sole trading business, now what's going to happen is the amount of money that I can put in the business will be restricted to how much money I have as a part of my savings, or I will go to the bank and probably ask for a loan. Now, the loan is also something which will depend if the bank wants to give that to me or not, if I have the relative, credit worthiness, if I have proper assets to give as a collateral to get the loan. So only then I will be able to raise the loan. But when it comes to other sorts of businesses like a partnership, there are multiple people. So multiple people can pool their resources together to have more and more of finance. But if I'm alone, then I have limited capacity to raise finance. And the third and the last disadvantage that you see on your screen is with respect to business continuity. So business continuity, as we were talking about earlier also, that if the sole trader dies without passing on the business to somebody else, then the business also gets finished. There is nobody to continue the business. So the continuity gets hampered if the sole trader is maybe not there in the world, or maybe that person is not in a condition to run the business. Maybe you get some injury, maybe you get some some sort of illness that you're not able to continue the business, then your business will no longer be able to continue without you, because you were the only one who owned the things, who was running the things, who was managing and controlling the things. So if you are not there, the business will not be able to continue. So in this video, we have learned all about a sole trader. We have started our chapter with learning the types of business entities. So we talked about who a sole trader is. We spoke about the legal differences. We then spoke about the advantages, and then we headed to disadvantages. In the next video, we are going to be talking about the partnership business as another form of business entity. Thank you.